Imagine a single 21-mile stretch of water, a tiny sliver on a global map, yet a blockade here instantly severs the arteries of global trade. When planning for the future, investors tend to look close to home. We watch interest rates, housing market fluctuations, and local political cycles. While we track those domestic data points, a massive vulnerability sits thousands of miles away between the Persian Gulf and the Gulf of Oman. It is the Strait of Hormuz. Two massive military forces are currently staring each other down in this exact waterway. The United States maintains a heavy naval presence, deploying carrier strike groups to project power and protect commercial shipping lanes. On the opposing shoreline, Iran continuously conducts military exercises, signaling its capability to shut down the strait to exert leverage over the West. This standoff is a direct mathematical threat. A disruption here flows straight into your stock portfolio, your local real estate market, and the total value of your personal wealth. 20% of the world's daily oil consumption is squeezed through these extremely narrow shipping lanes. There is no detour. Surrounding landmasses mean millions of barrels are trapped in the Persian Gulf, cut off from the open ocean. The trigger for a crisis does not require a full naval blockade. Isolated military strikes or the deployment of airborne drones against commercial tankers are enough to spark immediate panic. Energy markets operate on anticipation. Traders immediately price in a risk premium, an added cost based purely on the probability of a supply disruption, before a single ship is actually halted. The constant threat of conflict in the strait acts as a massive hidden tax on the entire global economy. Let's trace the exact chain reaction that triggers the moment a credible threat closes the strait. First comes the supply shock. Global crude prices spike violently upward. That energy spike instantly multiplies external costs. The price to fuel ships, power plants, and transport goods surge right alongside oil. These rising costs are passed to consumers, violently reigniting global inflation. Central banks are forced to react. To kill this new wave of inflation, they must hike interest rates or keep them punishingly high. Those high borrowing costs restrict capital. Mortgage margins tighten, housing markets stall, and corporate valuations plummet as companies struggle to finance their debt. A localized conflict 7,000 miles away mathematically guarantees the destruction of domestic wealth through the brute force mechanics of inflation and interest rates. We know exactly how this plays out because we have seen it happen before. Past geopolitical supply shocks transformed global tensions into devastating civilian reality in weeks, leading to severe gas rationing and endless lines at the pump. Those historical shocks stalled housing markets, crushed consumer spending, and wiped out passive income yields. Today, our highly leveraged and interconnected global economy is walking a dangerous tightrope directly over the Strait of Hormuz. True financial literacy requires looking beyond your local market. You cannot separate your personal wealth from the health of global macroeconomic choke points. With the Strait of Hormuz acting as the linchpin of global stability, you have to ask yourself if your investment portfolio is prepared to survive the inevitable shockwave.